In the next couple of minutes, you're going to learn the exact reasons as to why you're not getting approved for business credit, business funding, and business credit cards. And to give you a little bit of preface, my name is Colin. I've been in the funding space for a handful of years, and just for a little bit of credibility, this is just one of the stack of cards that I have that I've been able to leverage back into four individual businesses to the tune of hundreds of thousands of dollars, not only to grow my businesses and to scale, but also to generate massive ROI, all on the backs of the bank's money. So, when it comes to funding, there's more, and it states right here, there's more reasons than you thought as to why you don't get approved. Because I'm sure if you've watched this video at least one time in your life, whether if that's personal credit cards, business credit cards, a personal loan, an automotive loan, whatever it is, whenever you're interacting with the bank, I'm sure you've been declined at least once before. Now, it's not a bad luck of the draw or anything like that, but rather there's a specific formula and specific indicators that banks look for in order for them to give people money, right? That's what banks are in business for, is to loan money, make interest off that so that they can make a profit. So today, though, I'm going to be showing you different methods, different things that you need to look for before you go ahead and submit that application, whatever it's for. All right. But in this case, we're specifically going to be talking about business credit with a big emphasis on business credit cards. So, the first thing is how you can improve your chances of approval. Well, when it comes to improving your chances of approval, we kind of got to work backwards, and by working backwards, that has to include what is it that's on your credit report that the banks look at. All right, so these are common reasons that when you or anybody applies for something from the bank, that they unfortunately do get denied. So we have insufficient credit history, a low credit score, which is there's more to just the score itself, but then there's high utilization. Now, when it comes to the applications themselves, we have incomplete or inaccurate applications. And then when it comes to business credit and business credit cards and business loans, we have poor business formation. So first thing we're going to cover here is insufficient credit history. Okay, when a bank checks you out, they're wanting to see your history and ability. If you borrow $100, all right, we'll go super low on the number here. If you borrow $100, the bank wants to see that you've at least borrowed. Oops. They want to see that you've at least borrowed $100 in the past, that you have successfully paid it back. Okay. If you have that history of borrowing $100, whether if it's 100, 1,000, 10,000, 100,000, a million, they want to know, hey, if we're going to give you this much money, whatever the amount is, that you have a history of at least paying something close to that, but nonetheless that you have a history of paying back money. I know I'm kind of repeating myself, but I cannot put a big enough emphasis when it comes to credit history. Now, that also does include negative history as well. Negative history, these are such as delinquencies, charge offs, collections, late payments, too many inquiries. If you're shopping around for money and the bank is able to tell you've been shopping for money, I mean, we've worked with clients that are in the 800 credit score, but they're actively looking for money for their business, and unfortunately, they get denied when they try to do it themselves. Now they onboard with us, we remove those inquiries, make a couple tweaks and dials, and suddenly they have access to $250,000. Right? It's super imperative to have these items in check here, but once those items are in check, the amount of funding that you can receive is huge. Now, low credit score, all right? I have worked with people, and why I said that the score itself, it does matter, but it's not everything. Now, the score itself could bring you in with a minimum threshold that some banks have. I'll use a good example. Chase of America, or Chase Bank, right? Let's just say Chase Bank. Well, a common understanding with them is they want somebody to be at or above a 680 credit score. But with that being said, I have gotten clients with a 650 approved for business funding to the tune of, 50 plus $1,000 just from Chase, but they had that because they had really good credit history. All right. The credit history is far more important than what the score is. And on the other side of that same token, I've had clients that were mid 700s that have a very light credit file, only one or two, maybe two or three accounts, right? They've always been good on them, but they're low limits, only a few of them, and they get denied, right? Or they might get approved, but they have a super low limit, which in the realm of trying to get funding for your business, an approval is great, but if your limits aren't that high, well, hey, then we got to make some changes. We got to have put some meat on the credit bureau itself, on the credit file, and that could be through, the easiest thing you could ever do is if you have a family member, a close friend, particularly if you have a spouse that has good credit with long-standing credit history, you can go ahead and have them add you on as an authorized user. Now, let's say you don't have access to someone like that, well, then you can go ahead and purchase what is called an authorized user account. There's tons of different platforms that are out there that, they're trusted and they're vetted, but people list their credit accounts on these platforms like a marketplace, and you pay a specific amount of money depending on the account that you want access to, and that individual will then add you to that credit card. Now, you're not going to get access to it, of course. They're going to send the card to themselves, and they're expected, and they have to have a history of, if I'm going to add somebody on there, I can't go ahead and go buy a new car with it, anything like that. But that's a very quick and efficient way how you can get a ton of credit history instantly imported into your credit account. Now, high credit utilization. Anything above 30% in the eyes of a lender is pretty high. Now, if you're looking for a car loan or something, all right, we can play around with that, meaning the banks will play around with that and not be overwhelmed, as in scared to give you a denial. But when we're looking for business credit cards, you need to be under 30% across the board. That is an absolute non-negotiable. Now, you don't want to be zero, though. Through history and doing this, we've worked with over 3,700 other clients in this space, specifically business owners or a couple hundred people that don't have a business but want to start one. They think like, hey, I got to wipe all my credit card usage out. That's really not the case. You want to have like 2-3% usage, because it shows the lenders like, sure, I have access to all this money, but I use it. Because again, even if all these counts right here are 0% interest, the hope in the bank is eventually that you have a lot of usage on these cards so that they can make interest on it. Now, for my clients, we teach them different methods and different ways how they don't pay interest on those, even after that 0% period is come to being fulfilled. But once again, the point of it all is you don't want 0. You cannot have over 30. That sweet spot, again, is 3, 4, maybe 5, 6%. That's really where you want to stick to. Now, incomplete and inaccurate applications. For this, what we're presenting to the lenders matters. All right. If you have a brand new business and you want to say, oh, I make $1.2 million on a 3-month-old business, well, guess what? They're smart enough to know their algorithm for the auto approve or auto decline is smart enough to put the amount of money you say you make and the time that you've been in business, because they can verify that information. Guess what? You're going to get denied, right? Now, for incomplete is and I'm going to touch more specifically when it comes to poor business formation. If you're putting in, again, for a business one, is your address for the business is the same as your home. Your phone number for the business is the same as your personal phone number. Same with your email. If you're intermingling a lot of what the business has with your personal individual information, to the eyes of the bank, that's going to be an incomplete application, and that's an indicator of poor business formation, because the banks, again, they care about lending out the money and getting paid back, right? So to them, everything has to do with risk. So the more risk that you could remove from that equation when the banks check you out, the much, much better off you're going to be. Now, to go back a little bit more into insufficient credit history, a strong credit history includes long-standing credit accounts and a mix of credit types. What does this mean? Is you don't want to just have a bunch of credit cards. You do not want to just have a bunch of auto loans. You do not want to have a bunch of, uh, uh, again, these are all under the assumption if they're all paid on time, some of them are closed, etc. But even real estate, stuff like that. They want to see a diversity. They want to make sure that, hey, as you as a consumer, as a person asking for money, whether if it's again for the business or yourself, whatever, they want to make sure that you've had a lot of exposure to borrowing money and that you also have a lot of exposure in paying it back, regardless of what kind it is. So to wrap this up, if you for this portion, if you have a ton of auto history, right? You've bought a new car every couple of years. Let's say you like to lease vehicles and you've always done them through your personal credit, but you're like, ooh, credit cards, they're evil. I don't want any. Well, when you want to open a business and start funding that business through the means of business credit cards rather than a business loan, which has a ton of negative aspects, which I'll touch later in a different video, this will allow you much more versatility, a lot more leverage when it comes to the money that you're borrowing rather than a loan. So back to it is you want to have a mix of credit types. Okay. Back to if you don't have any credit cards or very few, get an authorized user account on there because it also imports all the credit history. Let's say if you find one or you know somebody that has a 10-year-old credit card with a $20,000 limit, well, guess what? That 20 years of good history will plop right into your credit file. Not only are you going to see a big bump in score, but also the credit card companies and the banks are going to be much more comfortable working with you. Now, let's say if you're starting from scratch, whether if it's on the personal or on the business, there's going to be times where you're going to have to get smaller credit lines and obviously pay all those on time to build up the history. Let's say if you're watching this video and you're 19 years old, you don't really know much about credit, tons of resources, even though they're not the best cards if you have advanced credit, but if you have starter credit, like Capital One. Capital One oftentimes will give somebody with no history, a $1,500 limit and a snap of your fingers, as long as you don't have bad stuff on there. So if it's you watching this video that you're just starting off, let's say if it's for the business, right? Please, regardless of what you see on social media or here on YouTube, do not have the expectation that a brand new business with a kind of insufficient credit file is going to get a ton of money. Now, we've had clients, like I mentioned earlier, we've had a few hundred clients that come work with us with no business, and some of those people do not have a big credit history going into it, even for the business. So what do we do as we're working with them and they're a client? Let's build up their credit score. Let's maximize your credit file. That's what allows us to unlock a ton of funding for folks. Now, right here it says apply for business credit cards early and use them responsibly. Now, the beautiful part when it comes to business credit cards, even though I have use them responsibly, that means don't get them, max them out, and think, oh, I don't have to pay them off or something ridiculous like that. Please, for the sake of your own finances, do not do that. But one beautiful thing when it comes to these kind of accounts, though, is every single one of these are not on my personal credit file. They don't populate there. They show up on the business credit file instead. So by doing it this way, I can have tons of money for my business that does not report. Thus, I don't get hit for utilization because the banks understand this is money set apart for a business. I'm going to use it. Whereas a personal credit card or a personal credit account, we have access to it. And of course, I have those too. We have access to it, but the banks almost want to use that as a last ditch resort, an emergency, something like that. Or if you're going to use it, they want you to be able to have the money to pay it off very, very quickly rather than carrying a large balance. So when it comes to business credit cards, if you're just starting off getting them, whether if you're doing it yourself, you're hiring somebody, whatever be the case, use it with the expectation that I'm going to invest into my business because I can generate profit. I can generate an ROI higher than the amount that I'm spending. that is what allows you to pay these accounts off, albeit maybe a little bit over time because you got to divvy it out properly with the income of the business, but it's going to set you up much, much better. Plus, of course, the higher history you have on the business credit reports, the more money you're going to unlock in the future. So on the low credit score, different factors include payment history, credit utilization, length of credit history, new credit, and credit mix. So new credit's important to mention too, because here I'm talking about how to not get denied. Thus, the other side of that same token is how to get approved. Is on the personal credit, if you have, let's call it 3 years average history, or rather, let's say if you have two accounts, you have one that's 5 years old, credit card, it's 5 years old, and you get a brand new one as of today. Well, your average credit age is going to drop because remember, 5 years to today, it might not show 2.5 years average credit time, but it's going to lessen definitely from the 5 year mark. So if you're going to open up new credit, just be aware initially you might see your score dip a little bit, but it'll bounce back in about 60 to 45 days. Now, some simple strategies. Again, there's tons of different strategies. I'm just going to go over some higher level ones for the sake of time on this video. But, pay your bills on time, reduce your debt. Again, you want to stay under that 30% mark. Check your credit report for errors and avoid opening new accounts unnecessarily. When it comes to business, you might have to open some new accounts, again, under the premise that maybe it's a brand new business, you don't have a big credit file on the personal. You're going to have to open some that might not have really big limits if you're not setting it up properly. Now, if you do the setup properly, you can have everything brand new and get pretty substantial limits regardless. But here, you want to be careful as don't open up credit accounts just for the sake of doing it because you think, oh, that'll help my credit build. Back to the example of the authorized user, that's going to be the cheat code that's going to help you get a whole lot more money because you're going to import all that new history. Plus, if you get the right one, you can have a high limit, which reflects on what the banks see because they're going to see that you might have access to a $20,000 card that's 5 years old that you only put a little bit of money on. That shows them a lot more confidence. It reduces that risk, unlocks higher levels of funding. Now, high credit card utilization. Why do I make a big emphasis on this? Is you want to aim under that 30% mark. Now, let's say if you're in a position that you're trying to get your credit card usage down for the sake of getting more money, that's when something such as a consolidation loan can come in effect, because even though you're opening up a new loan, all right, your credit score will go up because utilization carries a bigger weight than what the effects of a new account being opened. Okay. So, just a couple of small tips: pay off your balances. Now, this is a big one right here because if you have a card that's at $5,000, all right, $5,000 used on 10 grand. Well, now you're at 50%. Say it's through Capital One. Well, if you actually apply for the credit card increase through the Capital One app on your phone, well, that way you can actually avoid a hard credit hit. By the way, good little tip there. But let's back to the example. 10 grand limit, 5 grand used. Well, let's say if you ask them for an extra $2,000 for whatever reason, and you're approved. Well, now your credit card usage will go from 50% to, I think, 40-ish percent. Just some math I'm struggling to do in my head right now, but you understand the concept. Now, additionally, let's say for that one card, 10 grand limit, 5 grand used, but you have a couple of other credit cards. Well, maybe it's those that you ask for the higher limit, because now your overall credit availability will go up. Thus, your overall credit utilization will go down. Your scores will also go up. And if you get some extra limits on your other accounts, well, maybe you do a balance transfer, or I teach all my clients how to liquidate credit accounts into cash. I might cover some of that on a later video, but ultimately, if you're able to pull some of that money out of these new limits that you've received on your other accounts, well, then you take that, pay down the 5 grand. Guess what? Now your utilization even goes further, because it's better to have usage spread out on a number of accounts rather than have it all on one singular credit file. And this is all very, very pertinent when it comes to business funding. In fact, I'll actually share you the huge method that a lot of my clients use to liquidate credit cards. Again, this is much more effective on a business side, business credit cards, is let's say you have a spouse or a very close friend, same kind of idea when you're trying to get an authorized user account. What you do though is you have them open up a brand new LLC and from wherever you live. Once you open that brand new LLC, you apply for your EIN number. It's free. You go to irs.gov. Probably this whole process will take you 15, 20 minutes. Once you have that new LLC with the EIN number, that person then opens up an online merchant account. Think of Square, Stripe, PayPal, any of these online systems where you can actually like bill people, invoice people, and they can pay with a credit card. Well, if you do that and then you have them send you an invoice for whatever amount of money you want to pull off that credit card, the business credit card, you then pay the invoice with your card. It goes into their bank account. Then from there, they can wire it, write you a check, pull out cash, whatever be the case. But one caveat, huge, huge caveat, where this is not financial advice. I'm not a lawyer. Do at your own desire, if you will. But you cannot then take the money that you're using to pay that invoice and then that other person then use that for revenue purposes, like get another loan or something like that. Big no. So for the way of transparency, some of my clients do that. I have done that, but we never use it for outside financial gain. We just do it to liquidate some credit accounts. So now, incomplete and inaccurate applications. I touched on that a little bit, but this right here, you would be blown away how often people put in information on one application and then put in complete different information on the next. Banks are, even though they don't interconnect, like they don't completely talk to each other, but there are different ways how if Bank A sees that you put down, you make $500,000 a year in the business, but then Bank B, you say that you make $750,000 in the business and you did this on the same day, there could be trouble, not like bad trouble, but you could find yourself getting denied a lot more often because your applications become inconsistent. So if you're starting that journey of putting in business funding, write down whatever you're going to put on that first application and use that similar info for a pretty good chunk of time. If you're finding success in your applications, use the same information. Additionally, there are some banks that allow you to use forecasted revenue. Now, let's say if you have a business been open a year, on paper, through your tax returns, your business made $125,000, but you understand, hey, if I can put in an extra $200,000 in funding to grow my business within a year's time, I could probably make $350,000. Some banks allow you to do that. It's not bad, it's not a problem, and they will go off of that forecasted revenue figure. All right. Let's see. Poor business formation. I'm kind of running out of time here, but I'm going to go over the primary effects when it comes to how a poor business setup leads to denials because it builds more risk in the business. Few things you want to pay attention to. If you do not have a physical location, which most business owners don't, especially today, a lot of people operate from home. But if you don't have a physical location, you can get what is called a virtual address. Type in virtual address on Google. There's going to be probably 30 different platforms that you can sign up for one. What you do is you buy a suite number to a commercial address somewhere local to you or relative to where you live, depending on where you live. Once you have that virtual address, well, that is assigned to your business. Well, you got to go further than just buying one and saying, okay, cool, I have it done, because all your formation, your EIN paperwork, the state paperwork, the paperwork that you've submitted to the IRS, all that kind of stuff needs to reflect this new address that you would receive. So you got to go back to the state. You probably do it online depending where you live, but you go online in this case, you go online, you make an amendment, you might have to pay, a $30 fee or whatever, a filing fee. You then put in that new address for the business location. Well, then you got to go to the IRS. You fill out Form 8822B, B as in Bravo. Then you fill that out. You download it online as a PDF. You download it, fill it out, you send it to one of the 2 IRS locations, even has a box at the bottom telling you exactly where to send it depending where you live. Next, when it comes to business phone numbers, if you are using your cell phone for day-to-day business and you're not big enough to say, hey, I want to have a dedicated phone line, all right, then what you do is you go to Grasshopper or even Google Voice if you're low on cash. But you go to these either paid or free platforms, you get a separate phone number. And when it comes to the applications, you just use that phone number. Does not mean you got to start on all your social media or your business cards, use that new number. You could obviously if you wanted, but you don't have to. But by doing it that way, when the banks check you out, they'll see 2 separate phone numbers, the lists for the business and obviously the lists for you as an individual. Email. Quick and efficient way, if you do not use a Gmail account for your business email, don't say mybusiness@gmail.com. Just don't do that. Easiest and fastest way to do it, go to GoDaddy, buy the domain for your business. If it's going to be 123fundingme, right, .com, let's say that's the business name, then what you do is you go to GoDaddy, you buy that domain, then you set up an alias and a forward. So the alias is going to be your name at thebusiness.com, and you do that through GoDaddy. Then you set up the forward. So when somebody emails you to that, like the bank, let's say if they have questions or need more information, well, that new email that they just sent it to will get forwarded to your personal email. That's how you get around from having to go to, setting up a G Suite account, albeit it's like $7 a month. It's super cheap. That's going to be the best way to do it. But again, if you're on the cheap, you don't have a lot of money to spend, do it that way. A domain is like $15 for the year, and I think it's even cheaper than that. Next is you want to register your phone number with a 401 directory. You want to set up a Google My Business listing. Essentially, is you want to separate yourself from the business as much as possible, and you want to make the business as official and credible as possible. All right. Now, implementing some of these new tactics that we've discussed here, we're at 27 minutes, we're going to be wrapping up here in a moment, is you want to build a strong credit file, everything we discussed in the beginning. By building a strong credit history and file, you'll naturally just increase your credit score. Get your credit card utilization under 30%, but not zero. Remember, 3, 4, 5, 6%, that's the golden range. When you're doing applications, make sure everything matches that's on paperwork is what you're putting on applications. Forecasted revenue, items such as that, you want to notate, make a track of that, and which banks you've applied to if you're going for multiple. Properly set up the business, separate yourself, get a business address, get a business phone number, business email, put yourself on a directory. These are some very critical items. And when you're doing the address, I cannot stress enough, do the paperwork so it's official with the state and with the government. All right. Now, some important comprehensive approach and examples of successful implementation. I've gone over some examples earlier. When it comes to importance of comprehensive approach, go into this knowing if you have a strong credit file and an established business, go after major banks first. Go after Chase. Go after Bank of America, American Express. You need to have access to money in the business, whether if you need it now to grow or for a rainy day. Since these are credit card accounts, you only pay on what you use. So you could theoretically have access to hundreds of thousands of dollars that you might not need to use right now. But shoot, who knows? Maybe in 6 months something happens, or you're like, hey, I want to do a huge push on paid advertisements, on marketing, this and that and the other. Well, now rather than pulling the money out of the business bank account, you can do it out of these. You're not paying interest on them. You're getting points. You're getting a ton of benefits. And as long as the money that you spend through these accounts is going to be making you more than the money that you're spending, it makes sense every single time. Knowing I will die on this hill that leveraging business credit cards and 0% money is the fastest and most efficient way to scale, particularly if you're less than like $3 million in business a year, this process is massive. Now, if you want to get help with this, outside of what we just talked here on this video, I have two options. So right here, and I'll put this in the description down below, I have a video and a 43-page document that outlines everything we've discussed here in pretty good detail. That if you're like, hey, I think I could do it, you're leveraging YouTube University, right? Go to this link. There'll be this video right here. Below that will be the link to the Google Doc. Get that Google Doc, go through it in detail and start implementing. I go over everything from funding itself to personal credit repair and establishment, to building out your business credit, setting up the business properly. Everything that I've discussed here in this video is in this Google Doc here. Now, let's say you're on the other side of that token of you have a business or you want to start one and you want and need help. Allow our team to do it with you. I've serviced over 3,700 other clients in this space. Again, I walk the walk and I talk the talk. I wouldn't have access to this if I was just some dude talking on the internet. Okay. In that case, I will provide a second link that will take you to this video in a short form. Fill that out and see if we'll be a good match for us to help you get as much funding as you need. I mean, anywhere from $50,000 to multiple hundreds of thousands of dollars my team has worked with. We've gotten even people millions of dollars on 0% interest that they were able to leverage and quadruple their real estate holdings. So my name is Colin. If you saw value in this video, like and comment down below, and I'll see you on the next one.